Good afternoon, everyone, and thank you for joining us online for the Digital Dilemma, Protecting Privacy in an Age of Innovation. My name is Siobhan Choi, President and CEO of the Alaska World Affairs Council, and we are so glad that you've joined us online for today's conversation. Before we begin, I'd like to extend a sincere thank you to our major donors and sponsors whose support make programs like this possible: the Atwood Foundation, ConocoPhillips, Chugach Corporation, and the University of Alaska. Your continued support helps us bring important global conversations to Alaska and keep these programs accessible to students and community members alike. A quick note on today's format: we'll begin with a presentation from Yaya Fanusie, followed by audience Q&A. You can submit questions at any point using the Q&A function throughout the program. It's wonderful to welcome Yaya back to our Alaska World Affairs Council community. Some of you may have heard him speak about cryptocurrency in 2022, and we're thrilled to have him back with us again, virtually this time, for another timely discussion. Yaya previously served as an analyst at the CIA, focusing on economic threats and counterterrorism. He later became one of the first voices in the U.S. national security community to examine how cryptocurrency and blockchain technologies could be used and potentially abused by both state and non-state actors. He has since served as Director of Analysis at the Foundation for Defense of Democracy's Center on Economic and Financial Power, where his work helped shape early policy discussions around digital assets and illicit finance. Today, as a Senior Advisor at Crypto Council for Innovation and Global Head of Policy at Aleo, he continues to bridge the worlds of innovation, regulation, and national security, helping stakeholders navigate the rapidly evolving digital economy. With that, Yaya, welcome back. We're so glad to have you here with us again. I'm going to hand things off to you.
Thank you so much. It's great to be here with the Alaska World Affairs Council. Thank you both for hosting me, and thank you to the participants. I hope I didn't put my camera off too early while you were doing the intro, and people were like, "What is he doing?" I'm drinking my electrolyte water here. Um, it's a great pleasure to be here. I was really happy that you all asked me to present again after a few years. And what I would like to do is actually go walk through some slides. And this topic, digital dilemma, protecting privacy in the age of innovation, it's going to be anchored with sort of starting off with what I left off a few years ago, talking about crypto, talking about digital money, digital currency in this presentation. So that's going to be the lens through where we're going to start to think about this idea of what I'm calling digital finance at a crossroads, privacy or panopticon. And we'll get into what that all means, hopefully, through the meat of this presentation. But I'll talk a little bit about digital money formats, because again, we're going to start through the lens of money and finance. A little bit about crypto, how crypto has been used or it is being used strategically, what's happening in places like China, and really just the focus. My mantra is it's all about the data. Hopefully, we'll get to that. And what should be the approach in the United States and throughout the world for a digital economy and digital life without falling into digital authoritarianism. So I'll start with digital money, and digital money being something that's not new, even though people talk about digital currency and people say, well, what do you mean? We've always had digital money, even before crypto, right? We do online banking and all this stuff. But it's not new, but the concept of money in the modern era has been something that's usually created by financial institutions, right? Financial institutions, banks, are the ones that have access to the central bank and have central bank money. And they have the system, the way they transact is like you're the customer and you have a liability, or they have a liability to you. You give them their funds, and then you're able to transact. They operate really on your behalf, right? They send the funds from one financial institution to another. They're really sharing or sending the liability they have with you as a customer. That's how we do things online. And central bank money is not something that usually has been accessible to the general public. So when it comes to creating digital money, we've had to have institutions create this way for us to transact online. So I would say that there are three different types of digital money formats now. This is what people are already used to, online banking, PayPal, Zelle, right? It's really private sector money, financial institutions money. But in the past, 15 years or so, cryptocurrencies have sort of come online. And cryptocurrencies, I would just say, are a different format. Now you can debate what is money, but let's just assume it's a different format of digital money. It's purely computer science derived, or it's computer or internet derived money. That's what is unique about this form of money in terms of crypto. Central bank digital currency, something that really was a big discussion a few years ago, maybe less so now, except for in other parts of the world, is the idea or concept of the central bank creating digital money that makes itself directly available to users, to everyday customers in a digital format. If you're talking about a retail CBDC, we don't need to get into all these definitions, but I just want to provide. I want you to think that as technology has changed, the way we transact online changes or has evolved, and now money and how we operate with value. There are different ways to approach it, right? There's what we've always done for a while, since we've had the internet and we've had encrypted websites, where you can do online banking and online commerce. And then there's what cryptocurrencies have developed, which is sort of independently created uh, um, digital assets. Again, you could be agnostic whether or not you think crypto is a thing or not, but just know that this exists, right? It's out in the real world. And then central bank digital currency is a different approach. I always like to remind people that when you talk about crypto, people think about it as money, but really you're talking about data. It was a revolution. Creating the Bitcoin blockchain was a revolution. Oops, I think I accidentally pinned my. How did I do that? I didn't mean to pin my profile. Okay. Yeah, so Bitcoin was really a unique way to transact in data using a decentralized process. And this is not going to be a crypto 101. I'm not going to do that. But I just want you to remember that a cryptocurrency is really, you're talking about a software program that records transactions on a ledger. And it's really about this innovation is about data being recorded and confirmed and transacted on a decentralized system, right? A software system. So really Bitcoin, even though we call it digital currency or cryptocurrency, it's really about data and how data is confirmed or data is recorded and confirmed. So just keep that in the back of your mind. And so now it just means that we have different formats, and people like to argue. Some people get up here and say crypto is the future. Some people say crypto is nothing, is terrible. Some people say CBDCs are the future, whatever. All I'm saying is that now technology enables different types of ways to transact financially, whether it's Bitcoin, stable coins, which is something, if you have questions, it's something I've really talked a lot about, and CBDCs, right? In China, the ECNY is something which has really come is being experimented upon, experimented with. I always hold up this slide because this, even though this is an old slide I did, but when the Russia-Ukraine war broke out, it was interesting to point out that right after it broke out, like this is like February 26, 2022, people started doing donations. And they didn't go, hey, donate to this bank and it will send the money to Ukraine. They said, hey, send money, send crypto to these wallets, send Bitcoin, send Ether, send Tether, and they raise millions of dollars. Why? And this is my point. Whether you think crypto is a thing or not, this independently derived sort of financial software or computer software that allows you to send value, it sprung up as something that would be useful in this type of situation, a crisis situation where you don't want intermediaries, you just want to get the assets and send them to the people who are asking for them, right? So that just shows that's one use case that wouldn't have been good for banking or for PayPal. This was something that was suitable in that situation. Now, how did I start looking at crypto? Back in 2016, I looked at a terrorist crowdfunding campaign that was actually using Bitcoin. This is a graphic I saved from 2016. It was on Twitter, and this was a designated terrorist group, and they were actually fundraising in Bitcoin. And they said to raise missiles. This is what they said. They said this is what they wanted to raise, and just send funds to this QR code. It would open up their Bitcoin address. So I started looking at crypto from the illicit finance side, right? This is 2016, 2017. Even later, there are groups on Telegram that were soliciting through crypto, right? It's a situation where, what are they going to ask for? They're going to ask for an innovation that gives them value quickly. And so that's why a lot of my early work on crypto was really focused on bad guys using crypto, bad guys trying to use this technology, and we need to catch them. bad guys are going to try to hide their tracks. They're going to try to use all types of technologies to evade, to obfuscate. Right? That was the national security conversation back in 2017 and 2018 when we said, hey, these terrorist groups or even North Korea, right? They just want to get this crypto and so we got to figure out ways. They're going to use mixers to try to obfuscate mixers so that you can't see the trail because those of you that know anything about Bitcoin, the transactions are public. You can't see maybe who's behind them, but you can see the record of the transactions. So once you know a wallet address, you can run analytics and you can actually identify the paths of the transactions. So my whole focus back then was, okay, lots of people are going to use it. It's an innovation, but bad guys are going to use it, and then they're going to try to use tools to hide their traffic or to hide their trail, and that is, from a national security perspective, a bad thing. And then a lot of national security people were looking at this and they were saying, oh, they're using privacy technology, right? Mixers. We got to stop that because obviously they're going to benefit from that. That was the conversation about privacy and crypto, privacy and digital finance a few years ago. And relating to that, there was one sort of thing that was useful from a national security perspective, which was the people that were using this technology, really they needed to cash out because you couldn't use cryptocurrency, right, to buy the stuff that you need usually around the world. So you need to cash out, and that's where we have regulation, we have anti-money laundering laws, we have a whole system set up globally, most jurisdictions, to prevent people from taking illicit funds and using banks, using financial institutions, and the same is with crypto. But the problem came up that people started to say, well, is there a gap? Because some of the aspects of cryptocurrency technology, because they're decentralized, they're independent, maybe bad guys can use it, and maybe we can't get at them. And maybe it's privacy coins and mixers. These are things that could get exploited by actors. This was the conversation in 2017, 2018, and it really continued, but it's changing now. And I'll get into why in a little bit. But I want to say before we get into the change, this issue about illicit finance and government surveillance has been around for a while, and the anonymity of transactions, this has been an issue, and we've seen this issue in cash, right? Because a cash transaction offers anonymity. When you go somewhere into a store and you pay with cash, there's no digital record of that. There's no banking record of that, right? And that means that there are risks. That means that you could be doing illicit things, you could be doing crime, there could be the proceeds of crime. And we even know that cash is declining, right? So the use of cash may even be more suspicious to some people because most people aren't dealing with cash. So some people might be like, man, why are you using cash? But here's the important policy point. We still don't ban cash transactions, right? Yes, there are illicit finance risks with cash transactions. We have within our regulatory structure or our regulatory regime, anti-money laundering regime, we have ways to address risk. It's a risk-based approach to these risks, to anonymity that comes with these transactions. So I want to remember that as we get into our discussion. Because now the national security relevance of digital financial privacy is changing. It was solely about bad guys want privacy. Obviously people were always arguing that only bad guys do not want privacy. But I'm telling you, the focus in terms of the laws, in terms of what the government was saying, was really about, hey, priority number one is we have to not let these bad guys use these privacy tools, right? That's what Congress was talking about. And so the bulk of what I want to end on as we get into our Q&A is, one, what is the future of cash in a more digitized society or digitized society? I want to dive into this question. The other part, the backdrop to this also is something that I've been tracking for a while, is that as technology is changing, other actors are trying to figure out how to use technology to create different financial systems, to create different financial channels, different payment mechanisms and payment platforms. This is something I co-authored in 2019, where we looked at how Russia, China, Venezuela, and Iran were all experimenting, back then on blockchain technology and ways to create alternative payment mechanisms, right? Hold on to that. And look what's happening today. This is a screenshot of a website today, BRICS Pay. And BRICS, Brazil, Russia, India, China, South Africa, and now it's sort of expanded to other countries, are looking for ways to create different payment mechanisms that don't go through the banking system, right? So, backdrop, that's background for us to know. Man, there's so much I can say on this, but I don't want to delay because of the presentation. I got so much more to tell you. So if you want to talk about BRICS Pay, you can ask about it later. But I want to get into something we noticed in China. China, with its central bank digital currency, is creating a system where the state, its model is the state would have control or would have access to data which comes from transactions. And this is in their CBDC, the ECNY, or the digital yuan, the digital renminbi. And here is a screenshot from an actual report that we found, a presentation back in the early days when they were thinking about how this central bank digital currency should look like. And it had here, this was like in 2019 or I think, or 2018. And this was a rough sketch. Basically, it shows the central bank would have identity info, financial trading info, derivative info. Basically, the central bank would have access to all of the data, right? This is from an actual presentation that they gave before a UN body several years ago. So some people say, well, hey, the Chinese party already has access, right? China, it's a one-party state, it's a communist state. They already have access to your financial data. But I point out to this analogy, not quite. The way finance has worked for decades has kind of been, if you think about it, like you with a teenager. If you have a teenager in your home, and let's say it's under your authority, but the teenager has their own devices. And the way you have authority is you can go to your teenager and say, I want to see your device. I want to see your phone. And the teenager, has to pass it over, and then you can check their phone and you can do all types of things, right? That's kind of like how the banking system has worked, where governments can go to a bank and say, hey, we want to see this data. So that's how it is all over the world. That's how it's been, even in authoritarian states or even in democratic states. Like the plumbing is not one where the government can see everything at all times. What I think is being developed in this system or this approach, a CBDC approach in a communist state, is one where essentially the data is baked in, or the government is baked into the data with variations. I mean, it's not so much that the government is watching every single thing in real time, because that's a lot of data, and it's not built that way. But structurally, the data of this CBDC, from what I have sort of deduced from what the central bank has said in China, is that the data is available and it will be possible for the government to just unearth and the government to look at transactions. And add to that the issue that the government is trying to make more programmable transactions, money in which technically, if you think about it, maybe your wallet could be blocked easily at the flip of a button. Maybe you could, money should go into a wallet that you're supposed to have, but then the government decides, no, you're a category that shouldn't have the money. These are things that we don't have. This is not, even though people think the government is always watching them, the technology isn't built that way, right? So the one thing that the Chinese Communist Party had said years ago was that data is a factor of production, meaning that the data that comes in the economy should be seen as actually part of like an economic factor, like electricity. I think people say data is the new oil. I say data is the new electricity, in the sense that data powers everything. And we're seeing this now, right? Everything, your apps, everything is powered by the fact that there's some data behind it, or data generated, and that impacts what some other application will do, right? It impacts ads, it impacts analysis. And all of this stuff could be used. And I as we get to the end of my presentation, I want to give a cautionary tale. There's something that happened in China. And what happened was H&M clothing store, which many of you may know about, had put up on its website, I think a Swedish company, or is it a Norwegian company? It put up on its website something about the Xinjiang region and concerns about slave labor in China. And then at some point, the Chinese government got wind of this, did not like that, and wanted H&M to take it down. So guess what it did? It made it made H&M disappear digitally from China. What I mean is, it had, because the government had control or access to all the platforms. It made it so that if you went and tried to find H&M for the Chinese version of Uber, it would say does not exist or invalid destination. On the e-commerce sites in China, H&M all of a sudden taken off. So H&M was still there physically, but digitally it was removed. And this is because of political reasons. Now, this had nothing to do with digital currency. It was just the state enforcing its will on the digital ecosystem within the country to impact, for political reasons, a foreign company. And I think the ECNY, as it grows, would be a part of this system. Would sort of it would allow a new methodology, which is different from the methodology we think about sanctions, where you have to go through a process, you go through banks, but where it really proverbially, with a proverbial flick of a switch, you could turn wallets on and off to whoever you want to target. I mean, it's not said plainly. I mean, the government, the central bank, doesn't say this, but again, just piecing things together. And we can, if you have questions about this, and we can talk about it. The idea of data being integrated. So, the world of AI is one in which the value of AI comes from how much data you can collect. So if applications create data, if transactions create data, if people's movements create data, that data could be used for the state to then leverage it, maybe for economic benefit, maybe for strategic competition for companies, right? It doesn't have to be all bad, but maybe there are some downsides. So we're entering an era, as I hopefully bring this to land and get at some questions for you all. We're entering an era where now competition is such that it's not that the innovation of one particular thing, one particular digital currency, but it's about what system will be created that systematizes this innovation. That's systematized. And that's why I have the Model T, right? It wasn't just the Model T was created, it was that there was a new factory system that could then duplicate this and then benefit the industry and benefit the economy. And when we think about data, who uses data, and especially with AI, we're in a similar situation nationally and internationally. Who uses the data? Who leverages the data? How can data best be used? That's what this whole AI race is about. And then and then we come to the question, if data is going to be so important, then what sort of system should we develop where we know we need to utilize data? We know competitively we need AI, but how do we structure things so that people's privacy is respected? And the panopticon is the idea of building a system in which this was sketched out back, I think it was in the 1800s, the idea of having a building in which the prisoners at a prison could be viewed at all time, but it was set up in a way where they were not able to see when they were being viewed. But the panopticon meaning they could be seen at all times. And when you think about the need to create data for AI, you're creating essentially everything that could be used and be recruited and scraped and distilled by AI. You're creating a world where everything can be observed. Because what is data? Data means something is recorded, right? That's what data is. Data is a record. Data is information. So all of this means internationally, we can look at the threats from a security perspective, from surveillance, but also the competitive threats. Can one society leverage data better than another society, and what does that mean? And are we entering into a world? Are we transitioning from where it used to be, where who had the most gold was the most competitive advantage you had for your nation? And then for the past 60, 70 years, we've been in a world where whoever had access to the US dollar, that was most critical. Perhaps we're entering a world where it's really who has the best data. Maybe it's the most data, maybe it's the most powerful data. Maybe the setup of strategic competition, of geopolitics may change, because now a different asset is important and our economy is changing and technology is requiring different things to be useful. And we see what's happening with the value of the US dollar. Data is where people are trying to innovate to get past what the US is doing. So what do we do? One thing I noticed from looking at China is that China, they usually have a long-term plan. They have 5-year plans. They had a fintech development plan every few years. And the plan fits into this idea that, hey, we're not going to allow, for China, we're not going to allow cryptocurrencies, but we are going to allow a digital currency that the state can control. That's its approach, and that's how it's going to handle the digitization of its society. But for us here in the US, for us in places where the value of freedom is high, like in Alaska, right? And elsewhere in our country, how do we deal with this? Knowing that data and digitization is where the world is going, data use and AI, and knowing that we're not trapped, but we're in a world where, yes, data use is ubiquitous and we transmit and we transact and we're transacting online and finance is being connected to that world. How do we have financial privacy? What is the US approach compared to the Chinese approach, where we're supposed to have the Fourth Amendment and that there are expectations around unreasonable search and seizures, and that the government can't just scoop up your papers and your effects? This is where I myself started to take a shift and started to think about the privacy and digital financial question differently. I started to think of it less one dimensionally as, yeah, North Korea is going to want to use a mixer to hide its trails. Like, yeah, that's true. And yeah, we got to deal with that. And that's a national security issue. But I started to think more about, now, wait a second. Maybe we actually need privacy preserving technologies as we're getting more digital. Number one, you have to protect yourself. We have to protect ourselves from adversaries and enemies that are going to try to exploit our data, that are going to try to hack us. So just like encryption was basically privacy, right? The advent of encryption is basically privacy enhancing technology. So your communications are private. Similarly, as more of our activity is moving online, we're going to need some sort of way to protect our online financial behavior. And what is the blueprint for that when everything is going online, but we haven't figured out the privacy piece of this yet? We haven't figured out how we make digital finance, whether we're going through stable coins or whatever. We know more data is going to be created. How do we anchor our approach in US principles, American principles, the constitutional principles? And this is where I think this is where we're at today. And this is where I actually think there's a bit of it's surprisingly, there's not, especially, hey, I'm in Washington, D.C. People aren't articulating what this should be. There's almost like, yes, we're moving towards everything digital. Yes, we're moving towards AI, but the privacy conversation is like not even discussed very, very much in terms of technology. And so this is this is the sweet spot. This is a domestic and foreign policy issue that I think is going to get more attention in the coming years. And I think you all should be very aware of it. So this leads to me to why I've made certain shifts. I'm still a national security guy. I'm still someone who cares about stopping bad actors from from doing harm, right? From harming us and from doing illicit activity. But I started to see that there may be some strategic benefit in privacy technology, and also that we need to understand privacy enhancing technology in order to build the economy of the future that fits with U.S. Principles, American principles. And what's here in front of you is not labeled, but one example of a technology that helps enhance privacy is zero knowledge proof. And without getting technical, zero knowledge proof, I mean, where I work with Aleo, we specialize in zero knowledge proof technology. Essentially, zero knowledge proof is a cryptographic tool or cryptographic program in which the cryptography allows you to confirm the validity of some bit of information without having to reveal all of that data directly to the person who wants to confirm something. And in a nutshell, this is maybe not the best drawing, but this is like a way to explain how zero knowledge proof works. It's a way for you to determine that a person knows something. But I say this because this is like one example of a privacy enhancing technology that's being used. It's being used a lot in the crypto space. It's being used as a way to think through, well, how can you get away from this model of having to collect everybody's data? What if you had a model where maybe the data is collected once, but then once you go and you verify it, you don't share that data. You just share the proof that that data is there, or that data was there, or that this fact is correct. So this is an example of something that the crypto space has really spearheaded. So to end, and I'm going to end pretty much end it here. And I'll be open to questions where I can elaborate more on like some of the privacy enhancing technologies, what people are doing, especially in the crypto space. It's interesting because I think what has happened was back in the early days of crypto, privacy enhancing technologies, bad guys were using them, good guys were using them too, but there was, it was very one dimensional, right? Let's just go, we got to protect. And the government was really, not happy about that. And where we are now is we're in a situation where we need to understand who's going to win in privacy technology, because that may be all that stuff that the crypto guys were doing to try to hide transactions, because a blockchain is inherently transparent, so they came up with ways to obfuscate. Now those in the quote unquote mainstream need to think about, maybe we could use some of those cryptographic tools and use them as we build a digital financial ecosystem. Like, how do we keep people's transactions private as we change and we go from the old online banking model where it was Bank of America or Wells Fargo that was just keeping your data and then they would get hacked? And we move to a model of where maybe computer science cryptography is what keeps the data hidden, so that we don't have to rely on an institution all the time for all of that. That's where we're moving. And that's where with Aleo, that's kind of what I'm involved in, like helping policymakers understand the need for privacy enhancing technology. Yes, in finance, but it's going to be, I think, really in just our lives of the internet. And this is why it's important from an economic standpoint. I wish I had a slide for this, but this is how I'll end. Any of you that are old enough, old like me, I do have some gray. People say they don't know how old I am, but if you see the gray, I'm older. I'm Gen X. Back in the 90s, when you went online, it was HTTP colon and put in the URL, put in the address. That's how it was. That was before they figured out encryption and it became HTTPS. That S stands for secure. Before HTTPS, you couldn't have the boom of Amazon.com. You couldn't have the boom of online banking, online commerce, because that lack of encryption meant your information could get intercepted. So the internet before that was like, it didn't reach its full potential. After the HTTPS, that's when you were able to have e-commerce. You were able to have Amazon. You're able to have people didn't want to put their credit cards online. Now you do it. Now you don't even remember your credit card number. Now your browser knows your credit card number. And you're like, you're not even batting an eye, because the encryption technology is such that data is kept. Why do I mention that? Because now in the world of finance, with other applications, with blockchain technology, we're sort of at that stage, I think, where before you just had blockchains that were transparent and anyone could see what those transactions are. Now with the development of zero knowledge proofs and other technologies, now you're getting at a way where now you can transact and that information could be hidden and it's only seen by the people who are intended to see it, not the whole world. That is the same as bringing an S to blockchains, bringing security so that those transactions are essentially encrypted and the outside world can't see them. That's why privacy technology is important when it comes to the world of crypto, because then that can unlock all types of commerce, all types of actions. And, we even can work out ways to deal with the illicit finance risk as well. That's all a part of it. I see this as it's a chess game. Bad guys are going to try to use technology, and then the good guys have to figure out the technology. But we have to stay ahead of the game. And I always end with this slide, that think strategically. We have to think. Our policymakers need to think strategically about the technology, what to do with it, and how we're going to operate. And with that, I will end. I have a few different affiliations here, and unfortunately, I have a typo on here because I just put this up. So excuse the typo, but with the Aleo Network Foundation, the Crypto Council for Innovation, I'm also a visiting fellow at Georgetown. Feel free to reach out to me. LinkedIn is probably the best way. I don't do much on, you can tell this is an old slide because it says Twitter. And I have a podcast called the Jabari Lincoln Files, which is my spy thriller podcast that I always like to share with people. If you're interested in a financial technology spy thriller with a great audio dramatic reading, check out the Jabari Lincoln Files. And with that, I am done. So I'm going to take off, stop sharing, and can't wait to talk to you all.
Well, thank you. Thank you for that. And I do want to encourage people to check out your podcast. I was listening to some episodes. It's really fantastic. And
Cool,
I
cool.
told my colleague Nadia on a different podcast that we heard you freestyle rap. So you never know what you're going to find listening to these podcast episodes. So I encourage everyone to check that out. As we have questions coming through, I want to start with one question because I do know that we have some University of Alaska students online today. So I'm just curious what advice you would give to those students who want to work in, emerging technologies ethically and responsibly.
Yeah, well, so I guess it depends on where you want to, like where you want to be. Like if you want to be on the legal side, if you want to be on the policy side of things. Um, I would say to start, I would actually start, maybe I'm biased, but I would actually say to actually start looking at zero knowledge proofs, which I mentioned here. Because zero knowledge proofs, they're not a panacea, but the zero knowledge concept, I think, is a concept that's going to have some significant cachet in the future because it's really elegant. The idea of a zero knowledge proof is yes, you maybe you do show data, you verify data, right? It doesn't mean that you're forcing everyone to to not share data and to not have IDs, but you're trying to come up with a more efficient way so that you're efficient with what you share and that you don't overshare. So zero knowledge proof as like a concept is something I would say to learn up on and to actually to maybe yourself become an expert on, because I really think that zero knowledge proofs are going to there's going to be more discussion, they'll be more important to policymakers. And and generally with privacy in general, I mean, it's funny. What I think you should keep in mind is even privacy. All the times I mentioned privacy in this, I'll give you a tip. I actually think privacy is good in certain. The word privacy is great because we all understand what it means. But I would encourage people to think when it comes to transactions, think about the term confidentiality. And as you talk to others, as you talk about like what you want to do, sometimes when you say, "Oh, I want to work on privacy," there's still a stigma like, "Oh, privacy, or are you doing something wrong?" And we know that's not the case, but I'm just saying for like professional reasons, especially policymakers. But if you point out what I mentioned about like HTTPS, the idea that what the technology does, it's encryption is privacy, but what it does is it ensures that there's confidentiality, that everything is not open to the public, and we shouldn't operate in a way where everything is open to the public. And sometimes I was at a conference recently and people say, and then maybe the college students can answer this, because you know what people say about you college students? They say that you all don't care about privacy. I was at a conference and someone said, "Oh yeah, these kids don't care. These kids don't care about privacy. They all have First of all, this person was old because they said like you all have Venmo, and that you and that in your Venmo you leave your you leave it unprivate so people can see your. And I'm thinking you're probably not even using Venmo anymore. It's probably like from the mid 2010s or whatever. But anyway, but so people think that you don't care about confidentiality. I actually think that I would encourage people to actually to think more about confidentiality and what they do. I actually think there's going to be a cultural shift. I think the day of us putting out everything out there, I think that's going to change. And then the last thing I'll mention is, which maybe you probably have had presentations on, especially college students. Everyone is talking about it, agentic AI, right? Everyone talks about what agentic payments are. Maybe I'll save that if someone has specific questions, because if everyone, people are hyping this like agentic is going to be the next thing, every agent payments, whatever. Even if they are, maybe they are, maybe they aren't. But what we do know is that as bots go more online and AI transacts, you're going to tell AI to do things and it's going to just search out to whatever it can find. So I would encourage you to be thinking about how we have to protect data from artificial intelligence. It's not just some person but the fact that if that data is visible, it will be consumed by AI. And that is how we need to be thinking ahead of the game. So those are some of the things: zero knowledge proofs, think about confidentiality, and think about how AI is going to be very important, will necessitate a change in our view of confidentiality and privacy.
Great advice. Thank you. We have a comment here. Thank you for the great talk. Where do you
Mm-hmm.
see the future U.S. regulations for
Mm-hmm.
privacy coins heading? Do you think use of privacy coins will be indicative of criminal activity in the future?
I think the approach to privacy coins will somewhat be varied. I think in the US, so the regulatory approach, I don't think will be quote unquote banning privacy coins. I don't think, not in the United States, now in other countries that they may. In the United States, because it's kind of like what we have so far, which is, yeah, Monero is just a technology. That's a privacy coin. Zcash, even Aleo, the native Aleo token, is a privacy coin. Now, Zcash and Aleo are different because you can shield and unshield. And so that's why Aleo and Zcash are on certain exchanges, and in the United States, Monero is on fewer. So what does it mean? It means that there's a bit of, yes, it can exist in terms of regulations, but that some institutions may see it as riskier, and may not allow it. So the approach is going to be one of institutions are going to have to like adjust based on the risk that they feel. Um, some darknet markets are only taking Monero. So that may be an indicator. I mean, if you're an exchange and you're like, man, well, darknet markets have a high probability of using Monero. Do I want to accept Monero? Because of exchanges are going to have to make that decision. But what I think is going to what I think will change, or actually I mean, this is more of a hope. My hope, and I'm writing a white paper that I hope will be out soon, which talks about private stablecoins. I'm writing this for Aleo, and it talks about the technology that is being developed to make stablecoins private, because most stablecoins are not private; they're just totally public. And there's a passage in the paper where we say privacy coins are right now probably the closest you have to cash in the digital finance space. So if I said in my presentation that cash is like, we shouldn't get rid of cash, you have to give people the ability to transact in an uncompromising way that's anonymous, right? It shouldn't eliminate that. We should make everything intermediated. Well, privacy coin is the closest we have to that. And so I think that privacy coins should be seen similarly to cash as something that exists. Now, it may not be practical to use for every situation, just like how cash isn't practical. But privacy coins should be allowed. And I think we're going to have to find a balance. And that's going to come from the public. It's hard. I mean, if people in Congress, like, if people need to tell them that, hey, privacy coins, we do want to have something. Otherwise, maybe they will legislate them out of existence. I hope they don't. But no, I don't think. I think already, banks are already looking at or exchanges are already looking at these coins, and they will assess if they are indicative of criminal behavior. That's already happening. That's going to happen. So the balance, I would say, is just that we should allow for these things to exist.
Great. We have another question here. Follow the money has always been an important tool in law enforcement. Will this still be possible with your proposals for confidentiality?
Yeah, very, very good. Um, the short answer is yes. And this is the beauty of the technology. So the confidentiality that is being created in some of these even new protocols and new programs that do privacy enhancing, it's not all or nothing, where it's like, oh, here's a new. It's not like back in the day where like mixers were just like, okay, we want to obfuscate everything, and that's just the tool. That's what the purpose is. Actually, what is being created, and my white paper, I hope, will convey this, is that there are actually some privacy preserving technologies that are being developed that create privacy, but it's not uncompromising. So they'll create a private way to transact, but they'll build in, because this is computer software, you can build in different capabilities. They will build in certain restrictions or certain parameters. So one technology that's being used is where you can have a private stablecoin. It's a token that's backed by a regular stablecoin that's public, but you make it private. And then you can create within this private stablecoin ecosystem a view key, which does enable a third party, or maybe it's the issuer of the original stablecoin, to monitor transactions. And honestly, what you have, because people are like, well, why would I do that? Essentially, you have bank level privacy. You have what you have now with banking, which is when you transact with your bank, the public can't see, but your bank can, right? Like we're already used to that. That's not something where we've been objecting to it. Sometimes we object because maybe the government has too much access to it. But generally, we understand that, yeah, Visa or Bank of America, like they can see my transactions, but the rest of the world can't. So some of these privacy prisons, some of what's been happening in crypto is we're trying to do almost exactly that. So create the transactions that will be totally private. You can't see them on the blockchain. There's still confirmation that the transactions are valid, but the public can't see them. And you build in a view key so that there can be monitoring. It doesn't mean that they can take your money, but they can monitor. You can also build in the sanctions freeze list. You can do all. Someone just asked about OFAC. I was just about to mention you can build in a sanctions OFAC sanctions freeze list so that if an address in this privacy ecosystem is sanctioned, you can build in a freeze. Now we're getting into like programmability. I mean, the interesting thing is like, that's why it's really important that we do this right, because if you go one way, this could become it could be abused. I'm going to even jump to that second question because do you think major blockchains will ever become OFAC compliant due to regulatory pressure on miners? Wow, this is a really good question. I know you all are really following stuff in the crypto space. Um, I think what's going to happen, I think the movement now is, I think that, what's the word, what's the analogy, right? The horses left the barn. Is that what it is? The horses out of the barn, or I forget. I'm losing my ad, like my little adages here. Um, that ship has sailed in the sense that if you're talking about major blockchains at the level of the base layer neutrality is the way, in that that the process of validating and mining, for it to work as intended, you have to have a certain amount of neutrality. But where you deal with the sanctions issue is on top. And you're right that some people have raised this issue, and especially after Tornado Cash, there was a huge, I mean, this was like the big issue. Treasury and the courts finally said that the set of smart contracts, the protocol of Tornado Cash itself couldn't be sanctioned, but that's sort of a side issue. But the key there is that the compliance should come above, at the application layer, not at the base layer, not at the mining layer. That's what, that's the direction. And the current legislation that's out now with Clarity, the Clarity Act, it's clear in the United States that, this is the approach, the regulatory approach. So even though this was a huge issue before, if you're talking about the major blockchains that are already decentralized, that are already accepted, BTC, ETH, I think the ship is, things are the way they're going to be. Now, newer blockchains are able to do something different, and so that's something that newer blockchains. But I think the major ones will keep base layer neutrality.
All right. Another question. Oh, echoing here. What level of confidence do you have regulation is adaptive, sufficient to protect public interest in a tokenized world? And what incentive exists for platform founders to concede control of data for public protection?
Wait, the last part again?
What incentives exist for platform founders to concede control of data for public protection?
Incentives. What incentives exist? I don't know. I would think of it differently. I mean, maybe what I could share there is what I alluded to before, which is those of you, because you all are really in the weeds on this, I really recommend looking at this Clarity Act, the latest legislation, which was just a new draft just dropped on Monday, the Senate Banking Committee. It's 300 pages, but what you would probably want to do is put into AI to help you to break down the provisions in the Clarity Act in this latest, this May 2026 draft, and it's pretty clear that what the legislation is trying to do is trying to ensure that those who do create platforms are able to put in certain measures like cybersecurity measures without having to, be seen as like, a money transmitter, because you're creating something that is decentralized, a decentralized platform. And if North Korea hacks it, you want to maybe put in certain measures that would try to prevent that or would try to prevent money laundering. But you don't, because you don't control funds, you're not yourself a money transmitter. So you don't want to be caught up in inappropriate sort of regulatory obligation. Right now, what's happening is I think what this questioner wants, which is protections for those who are just creating the platforms or creating the software, for them to not have to be seen as a financial institution. That's what the legislation that's on track now is actually doing. Now, some people are going to quibble with like it could be stronger here or there, but I actually think we're entering a world where there's going to be much more clarity, and it'll be safer for people that are building platforms to not have to fear like, oh, they're gonna, people are gonna go after them for what they're creating. Um, I don't know if I got all of that question, but I mean, I'll pause there.
Great. Uh, okay, we have a couple more coming in. Do you think that President Trump's recent about face on developing regulations on AI is a reflection of your concerns, or is he likely changing his stance for other reasons? With the caveat, I understand you cannot read his mind.
Yeah, definitely that caveat is correct. So you're asking me to, I mean, so maybe if you're giving me license to speculate, the only thing I would say is it is true that this AI in particular is evolving so quickly that your stance on things, it actually makes sense for your stance to change somewhat. And I don't even know if I don't know if it's, I mean, maybe the questioner knows better than me. Like, I don't know if it's like an about face, right? Maybe it sounded a little more like just a change around maybe some specific protections, not totally changing and say like, oh yeah, the states should regulate AI, we should have a bunch of different rules, but that there's some things that maybe we need to either rein in or have some oversight for, some direction for, and that can make sense, right? When you see how quickly the capabilities start doing things that we weren't even thinking. And especially now, I remember someone talking a year ago about agentic, and it was like, wow, what is that? Like literally it was over a year ago at a roundtable, and someone was breaking down like how agentic payments are going to work. And now we're actually in a place where okay, we're getting close to that. So I think it makes sense for policymakers to really follow this, but to not get caught up. And I think the challenge with a lot of the AI stuff is, there are narratives coming from industry, narratives coming from different sectors, which there's a lot of hype or there's alarmism. And I think if you have sound advice and sound analysis, you can kind of like see through what is like someone just trying to, give you a narrative that is just, that is maybe a little skewed. Um, yeah, I think this stuff is just changing so quickly that it actually makes sense to think through. Because even I myself, over the past year, have, as I've gotten to use AI more, gotten to see, you kind of see what it can do, you see its limitations, and then you actually see the risk. So I think it makes sense, to think through this very, very cautiously. There's one here on the screen. So do you think CBDCs with zero knowledge tech to enhance privacy will be built? Any CBDC transaction under 100 could be made private with ZK tech. Interesting. So this gets into a bigger question. So yeah, certainly CBDC could have ZK tech. Absolutely. I mean, the EU, interestingly, is planning a CBDC. I don't know if they're really going to do it, digital euro, because I don't think the whole EU, everyone's on board, but the politicians, many of them are trying to push a digital euro, or at least some of the policymakers. And so you could do that. But I think the bigger question, a bigger question is, should you do a CBDC? Because you could also have a private sector led, whether it's through let's say through stable coins, approach to upgrading digital finance. I have some reservations. I started to have more reservations around CBDC when there was one thing somebody said to me, which was like, okay, governments are not good with innovation, right? You know that governments are not good with like software development. And you know that governments aren't good for like upgrading things. Just look at any government website. Um, and so, are we sure we want to create a whole infrastructure that is government led for our financial sector? Whereas, at least for right now, what we have, even though it's a hodgepodge of different, plumbing and different, architectures, it kind of is public and private, but, it sort of works in its clunky way, but it would probably be worse if it was just some government infrastructure that had to be fixed and patched. So, but yeah, I think zero knowledge proof. If you're going to do CBDC and you want to have it private, yeah, you would probably want to integrate zero knowledge into it.
All right. And so obviously you talked about China. Are there examples of countries or systems that you think are striking a healthier balance between innovation and civil liberties?
When it comes to finance, that's a good question. It's funny that no one rings out to me, right? You would think I would, by looking at this, no one is. I actually think it's within the U.S. lane to really do this. Um, and maybe that'll develop. It's just been so much a conversation of CBDCs, and the privacy discussion has been muted in all that. Like, let's say 3 years ago when the CBDC stuff was at its height, and like every country was having a CBDC pilot, everyone was talking about CBDCs. Like, even in the EU, they would say, "Oh, and it's going to be private." But one thing someone like me was looking for was like, "Well, how? What? What does it look like?" BIS, or I don't know if the person is putting the BIS as a good example. Maybe the BIS is doing a lot of the BIS is the Bank for International Settlements, and the BIS is very much at the forefront or supporting a lot of research on CBDCs and even some private ones. There are some private pilots, research pilots that they've sort of put out there, just sort of as research. Um, and so I'm curious what that next bill is. I don't know what that bill is that the person put. But I would say I've been underwhelmed by the privacy conversation because I kind of feel like you kind of have to have a lot of privacy maxis, people that really are into privacy, like really into the cryptography of it. You have to have those people really in the weeds for crafting this type of stuff. And that's what I realized. I was like, okay, yeah, you can do CBDC and it'll be private. And then you would just think about, oh, okay, well, what about when this happens? And then you unearth the transaction, you sort of unmask the transactions because you have a lawful order, but then you catch all these benign transactions and you look at them, then what do you do? Those are questions that were never really answered in a lot of the conversations that I was around. So I'm curious. William sounds like he has a lot to say, so I'm curious what he's putting in there.
I think the bill he posted is the Clarity Bill,
Oh, great!
or
Thank you, thank
Clarity
you.
Act, if anyone wants to look at that.
Hmm.
All right. Well, let's see. We'll wrap up, I think, on this last question here. So, let's look ahead, 10 years from now. What do you think the digital future will look like? And, if there was policy change, or you said, you suspect there will be a cultural shift,
Yeah.
one thing in Yaya's mind,
Hmm.
what are we leading up to here?
You said 10, like in 10 years.
Yeah, 10 years from now.
Wow. Total. It's really speculation. I'll tell you the biggest thing that I think is going to occur, but I'm not going to tell you like how we're going to deal with it because I want us to deal with this in a good way. I think we are moving towards a world where the centrality of the U.S. financial system or the centrality of the U.S. will be diminished. I think we're heading towards that, and I say that with, I mean, that's not a good thing from the standpoint of all the good things that the U.S. is going to support. So I think that the issue of that BRICS pay that I put up, I wish I could have put more time into that, but because I really just only recently found it, that BRICS pay, which is actually a lot of Russian developers are behind it. That's a great indicator. I'm not saying BRICS pay is going to work or that BRICS pay is going to replace SWIFT. I'm not saying that at all. Or Enbridge, which is something that China's really behind, which I didn't talk about. Enbridge is another great example of something that other nations are trying to do so they can create their own sort of financial system. I think we may have multiple systems. That's the biggest thing, and to me, that's a huge deal. We're going to have multiple, whether they're competing or sort of alternate systems for finance. That is clear, and what that looks like is going to depend on stuff that happens politically, geopolitically. But I think that's the thing that I would say it's not going to be one system, and the U.S. is going to play in a world where we most likely aren't going to have the same influence. So that we're going to really have to get this right. We're really going to have to get the technology right, and we're going to really have to think strategically about, well, what do we do if now North Korea or Iran or whatever adversarial country or China, a U.S. sanction doesn't mean as much, doesn't hurt as much. This is going to have implications for our statecraft, for our diplomacy. So I think the world is definitely shifting, and we're going to have to be ready. And and I don't want to end on William's note of decline and decadence, even if I may agree that we see signs of it. So I will end with the fact that yes, sometimes nations do decline, but there's always the opportunity, right? And that's I'm a bit of an optimist. And what you're getting here is that if we can accept that there's going to be a change and not just fight it like, oh no, it's not going to be the same. American hegemony is not going to be the same. What we need to do is be smart and figure out how do we play in this environment strategically so that we can still bring good into the world and hopefully not be in a terrible situation for our children and grandchildren. There's still hope, so I end on hope.
Thank you. Thank you. We always like to end on a high note. So I appreciate that. Thank you again for spending part of your afternoon with us. And we hope to see everyone soon. Thank you, Yaya.
Thank you. Have a good day.
You too. Bye.